What's up, everybody? Happy Friday. It's that time of the week. That's right. We're your hosts, Kyle and Herwig, ready to give you the Security Token Show, which means all the latest news, digests, and everything related to tokenization and RWAs from the week. And once again, we have found ourselves in another week of so much news, we even had to cut some stuff down so that we can make it not too long, right, Kyle? But whew, can't wait. Kyle, what's going on, man? How are you?
What's up, man? I am dialing in from my iPad today, Herwig. You see, I've flown on a lot of airplanes in my life, and certainly recently have been on quite a few. I missed our show last week as I was doing a quick trip. I had to take a few meetings in Paris. And while I was in the Charles de Gaulle Parisian airport, the X-ray scanner fried my computer. Can you believe that?
That is crazy, is what that is, and very unfortunate.
It is in Apple's care. They are fixing it, but I am dialing in remotely via iPad today with the script of the show on my cell phone. So we bootleg things together here on the Security Token Show, but that's because we want to bring you the best news in the industry, 5.5 years strong. Hurry, we have a great slate on the show today. I can't wait to dive right in.
But just in case Apple is just one of our listeners of this episode, Kyle, please hook him up. Go get him his computer back.
Tim, I shot you an email. Check your email.
Anyway, that's right. Let's hop into the market movements. Now, Kyle, before we dive into this immense, awesome lineup of tokenization news, I do want to, of course, talk to our viewers real quick and say, please, if you like this show, if you want to see us keep doing this every week and make it even better, give us a like, subscribe, share, get us the word out there on the Security Token Show, because we're going to keep making this show better for you as best as possible. So, Kyle, we've got a great piece of news here, starting off with the fact that Spain is really starting to mimic and build infrastructure for security tokens for RWAs for tokenization. I love to see it. BBVA, one of the biggest banks in Spain, their asset management division launched a tokenized fund through the sandbox that's over with the regulators in Spain, which means that they're basically getting ready for this future. They actually used a private ledger blockchain, all funds, and ultimately, started doing what I presume are these proof of concepts and these pilots and showing off prototypes of doing tokenized funds. So it's great to see Spain get into the game. Kyle, any thoughts on this news?
Well, Herwig, I actually didn't know, and maybe we've covered this in the show, maybe I just forgot, but Spain having a regulatory sandbox, I think, is really cool to work on some of these things in the fintech sector. We've covered ad nauseum how awesome I think it would be for the U.S. to have a regulatory sandbox, how productive I think it's been for the Monetary Authority of Singapore, for example, to do such a thing. We know that England and the UK have been successful in doing something similar. So I love these types of trial situations where you can build things. And I do think that aside from all of the coverage and all of the obvious reasons why building in a regulatory sandbox makes sense, I actually think that one that is maybe slightly less appreciated, but is just as important, is it does give the regulators an opportunity to understand where the innovation is happening. And when you look at in the U.S., sometimes when you have these depositions, we've made jokes many times, Herwig, about when Mark Zuckerberg has to get deposed by the committee of whatever or whoever, they always ask questions that show that they just don't fully understand how some of these things work. And so I do think there is a lot of value in having a regulatory sandbox where some of that stuff can be much more clear, or at least the data and the information itself is much more readily available for some of these decision makers, and at least for their committees that do the research and prepare these things. So I think that transparency to create clear laws and regulation, I think, is actually a very underrated component of these things as well.
Absolutely.
And I'm going to take us into the next one here, Herwig. We're talking about Libeara. And Libeara is working with Wellington and FundBridge Capital in order to launch a tokenized money market fund they're calling the Ultra Fund. And so Wellington is the sub-manager. There's a lot of parties in here. They're launching the fund on the Ethereum blockchain, but they also are planning to launch across other different blockchains. They're using Standard Chartered as a custodian. and it's rated by Moody's, which is wonderful. Now, the thing here that I thought was interesting is that they're actually, Herwig, creating a type of fungible swap between other money market funds, which allows them to actually swap security to security. And I think that that's a really novel concept. Any thoughts there?
100%. In fact, I actually give credit to Anthony Basili from Coinbase. He said this at Tokenize This back in May, where this is a disruptive concept of, well, we always have to go in and out ultimately via cash, or now we're even talking about money market funds, but money market funds is a solution. Bring that concept to what you just said between having this, basically on a token swap with Ultra Token, two securities. That's a very novel concept in self-swapping. And eventually you can take out and say piece of property that could be paired up with a piece of gold token or an Apple share token that could be paired up with another money market fund token, right? You're going to have this new level of pairing and liquidity that is developed thanks to tokenization that is going to be an absolutely massive, fundamentally disruptive thing for financial markets, without a doubt. Every bank that's why they're looking at this. It's why we're talking about some of the biggest names in finance on our show, because they realize that this is fundamentally going to, make finance faster and smarter and better. Right, Kyle?
That's right. That's totally right.
And in fact, on that theme, UBS is getting into the game as well. So another major bank, of course, and this time they're also doing a money market fund. I gotta give them credit because everybody gets kind of smart with their naming in these things, and they came up with the UMINT token, which stands for the UBS USD Money Market Investment Fund token, which is on Ethereum, they say. Which UBS has a history of kind of working on public and private blockchains. But this goes to show you that I think BUIDL once set a huge standard. Shout out to Larry Fink for launching their product on Ethereum publicly. And so now UBS is competing, which, again, this is a huge market opportunity. I can't wait to see. There's lots of good infrastructure working with Finality. I can't wait to see this market continue to develop. It is clearly now heating up. We know Coinbase announced they're going to be launching a product earlier this year. I can't wait to see more and more of this just heat up because it's all good for tokenization, in my opinion. What about you, Kyle?
Yeah, well, I think these are well-timed conversations and topics here because it does make it interesting. I mean, each bank and each company seems to be launching their own money market funds, and we're going to have to settle them within each other. And it's just a much more efficient process to do that. So cool to see those two things back to back with each one of these money market funds. I also think there's demand and need for infrastructure to facilitate the coordination between all of them. And so that's what gets me the most excited, is that interoperability component. We've been preaching, Herwig, I think we've probably said that word 250 times or more on the show over the course of the last 5 years. And it's nice to see that that finally institutions and some of these companies are embracing that idea.
Yeah, no, I absolutely agree.
All right. We also have AIB. AIB? Well, the Asian Infrastructure Investment Bank, they have grown their tokenized bond. They originally issued a $200 million tap issuance, but they've actually increased it with a new $300 million digitally native note. There's a new acronym for you folks, DNN, on Euroclear's DFMI platform. So this is part of the sustainable bond program where they're launching these big green bonds and doing some amazing things. But Herwig, the reason I brought this one up, not only is it great because it's a bond and it's sustainable and tokenized bonds are exciting for the show, but this is actually now in the top 5 largest bonds in the world that are tokenized. Thanks to Jason, who helped me out on the research on STM's website, we were actually able to calculate it is the 4th largest tokenized bond to date. So this is a pretty big deal coming from the Asian Infrastructure Investment Bank in the European jurisdiction. They actually also used R3's Corda blockchain, and so that's how they brought it to market, and it will list on the Luxembourg Stock Exchange. So a big, high-profile asset just came into the market, and we just saw our market cap grow by $500 million. In this case, $300 million. So some cool stuff there.
No, I love to see the market growing. Digital bonds are not talked about enough in terms of what's happening. It's another going to be another trend that gets huge, I think, next year. And it's already proving itself this year across the entire globe. So I can't wait to see that happening. Finally, we're going to move over to OSL and China AMC, which are also launching a tokenized fund. But what I thought was interesting and why I wanted to bring this up, Kyle, is this is showing that they're going retail with this product. And so this is a big deal because now what they are calling Project Ensemble is they're now bringing tokenized products to retail customers, which is sort of, to me, I think always have been the final leg, the biggest hurdle for a lot of token products, right? The goal for democratization, that anybody could buy it, et cetera. And we've seen China roll out their own sort of central bank digital currency already, very progressively. We've seen them issue some of the biggest bonds already with some of their banks. And now we're seeing tokenized funds go to retail investors. Like, that's a full on-chain economy. If you ask me at this point, it's going to all become more and more interoperable, faster, and more beneficial. They might be the most ahead out of any country, sort of from this perspective, just in terms of having all the pieces getting built out.
Yeah, I think that's a great point. And, some people may ask, who in retail is going to be buying this fund? And while I think that's a good question, I think even if they don't see a ton of retail activity, just the act of pushing this thing through from a regulatory perspective and a technological perspective opens the floodgates for many more fund products and many more opportunities to come to market. And I think that just bringing a proof of concept to market here is something that's really, really valuable. And it's probably the main focus for them, as opposed to generating significant primary traction, even if that would be, certainly that would be ideal. They would never turn that down. But I would be surprised if that was the main focus here.
Well, I agree. I wouldn't be surprised either. And that is the market movements. Don't go anywhere because we do have a bunch more cool news to cover. Jason, I don't think we have any interviews this week, do we? No from Jason. Then let's move on to the token debrief, everybody.
All right, Herwig, and we're barreling into the token debrief. This is where we're going to be diving into some of the other amazing headlines throughout the day. And I want to kick it off with something that I found really interesting, and maybe not exactly for the reasons in the article. In the U.S. Treasury's most recent comments on tokenized treasury products, they actually noted specifically that they think that private permissioned ledgers are going to be the most useful outlet, or at least most useful solution for these types of products. Now, I certainly understand why they feel that way, right? The Fed particularly is inauditable, realistically. They also are kind of this esoteric institution that likes to have its own control over the money, and they use that to control things without necessarily driving retail hysteria. So I certainly understand why they would feel that way. It does seem like, at least initially, the market has disagreed, and one might argue that competitive markets have driven innovation in this space, and therefore that should be maintained. But Herwig, I think the thing that I found most interesting here is that this actually validates that tokenized treasuries are kind of here to stay, right? Like crypto might go up and down, we might see prices go left and right, but it seems like it's pretty clear to me now, especially with all of the institutional banks that launch these products. We cover at least 1 to 2 new ones every week. And now the Treasury itself recognizes that we should not, it's no longer a question of if Treasury should be tokenized. Now the question is how they should be tokenized. But I think that's actually a really big binary kind of shift in mentality that a lot of maybe the largest government style of institutions haven't wanted to necessarily publicly accept. But if you look at their words and actions, it's pretty clear where their perspective lies. I thought this one was a really fascinating reality.
Let's be real. It's gotten to a size you can't ignore, especially if it continues to grow at an exponential rate, and the potential is massive. So, I think they have to. So I'm very happy to see that. But you're completely right. We've been talking about it on the show in the past, and you and I for a while, about how stable coins are good for the US dollar in this regard. Now it's validated by the US Treasury. And again, that there is, we've talked about it on the show, but let me be very, very clear. There is a flippening that will come, in my opinion, of on-chain reserves powered by treasuries products that are on-chain treasury products. So eventually, if there's 150 plus in stable coins, there's going to be 150 plus at least in treasuries, and there could be well more to show the strength and reserve of a treasury behind a specific stable coin. So there will be potentially a flippening of reserve value of treasuries to the actual stable coins in itself. And so that just means great news for the whole sector. There's a lot of opportunity, which we see a lot of money market funds and stable coins coming into. And it just proves the very fact that the crypto economy doesn't hate stable coins. They love stable coins. They love RWAs. Ultimately, we can't live this volatile lifestyle of living our gains off of meme coins and specific crypto projects and investments. Ultimately, we want some stability. You want to be able to go into stable coins. You want to be able to potentially get some yield that's stable and less risk that you can count on, right? So I think we're starting to bridge that gap. To your point, this is the U.S. Treasury kind of just validating that this is here to stay. So
I was kind of smirking as you read the article. It's kind of like, we got you.
No surprises that they recommend a private permission. That's just
that's for sure.
Just what they would want to be able to have the best oversight on. But maybe there is some level of systemic risk that they might be considering there. But Securitize is my next piece of news, Kyle. They have officially crossed a major milestone in the industry that I don't think anybody else has accomplished, as far as I know, other than if you count the Figure partnership with Provenance. But Securitize has tokenized $1 billion worth of issuances on their platform across multiple chains, across many products and clients, a very diverse library and a portfolio, if you will. In fact, Security Token Market, the show behind this, is one of them. And they have now also announced the launch of fund services. So, of course, a lot of specifically fund admin services. Sorry, but this is a big deal, Kyle, because we've seen it on the consulting side. We've seen it sort of be a thing that pops up as fund managers are evaluating the whole new tokenization environment, is who can be a reliable fund admin that gets this stuff, that takes advantage of extremely new, cool, novel capabilities like the one that Superstate just came up with that we're going to talk about in a minute. This needs to be a on-chain focused fund admin. So I think good on Securitize, fits right into their model if they're trying to be a one-stop shop for everything. That's why they have, that's why they bought an RIA. That's why they have the ATS. That's why they have a transfer agent, their whole tech stack with multiple, integrations across chains. And now they have this nice library. I think that's the sign of a flourishing ecosystem, Kyle. That's a sign of a full RWA economy coming together. So congrats to Securitize on that front. And I'm excited to see how their new fund services resonate, bringing on more and more fund managers, reducing that friction to get them on chain. And us, anything that brings more products on chain, more assets on chain, we're here for it.
Yeah, this is a fascinating development and one that we'll continue to monitor. As we've talked about, I personally am really interested to see how the money market style of product, how that develops as interest rates change. So that's going to be, I think, the really interesting case study. Do we see a increased acceleration because treasury funds increase significantly in the sense of not as much funds as in fund products, but just treasury amounts, right? If you have a lot more companies raising a lot more money, then are they going to park a lot more money into yield-bearing treasury products? Or is the changing in interest rates going to reduce demand because they're a less attractive style of investment product? I'm not sure which one is going to win out there, but I am excited to see how that changes over time. And that's certainly the trend that I will be monitoring over the next 3 to 5 years, is seeing how interest rates affect the treasury style of accelerated adoption. And I'm going to keep going, Herwig, with the ECB. The ECB does open their invitation to partner on the digital euro project that they're working on. And we've covered a lot of the frameworks that the EU has come out with in the past. We've covered, we've certainly seen how European, union financial sector stuff ends up getting rolled out. It is obviously incredibly difficult to coordinate some of these things across many different countries, and certainly England didn't take too favorably to some of the things recently. So it'll be interesting to see how a central bank digital currency or some sort of digital fiat will be embraced by the greater European Union. The goals of their partnership are to figure out how payments could be made on a technical level in terms of both having back-end and front-end providers to work with, also figuring out how that's going to create new opportunities for people to participate within their general economies, as well as they want to explore other use cases, ideas, and visions. So this is a very general style of call for partnership. But again, as we talked about, Herwig, this is coming everywhere around the world. We don't know when, but certainly every country, every jurisdiction around the world has their eyes on how they can digitize their currencies, maybe for protection and safety, maybe for optimization and increased turnover. Also, potentially, there is the elephant in the room that many people feel around surveillance. So what are your thoughts on the ECB and what they're working on here?
I mean, this is Europe doing their thing. Does not surprise me, and that they are. I'm happy that they're bullish on this technology for all the reasons: the transparency, the benefits, the efficiency. However you want to look at it from your opinion around sort of a central bank digital currency. But in Europe, this is going to be much more accepted if rolled out, much easier. Doesn't mean that it won't be a disaster. I think it definitely has potential. But it's something that potentially could be seen as too big to fail, right? Like, it's just such an important upgrade in financial systems that if Europe wants to be competitive and be the most modern market, this is one way for them to do it. And the ECB, I think, has been proving that with the numerous trials that they've been doing for months on end in this space and using this technology. So I think they fully get it. I think they're going to roll it out. I hope it's successful, because it'll also force America to upgrade its systems, right? So that's what I think of it.
Yeah, I think that's a fair take, and the classic take: only time will tell. We're not here to cast judgment. We are here to embrace and support. So certainly, if anybody from the European Central Bank or the European financial committees are listening to the show, hit up me and Herwig. We'd be happy to share our thoughts.
Yeah, happy to help. That's what we're here for.
What's next?
The industry's biggest cheerleaders. Superstate, man. That's what's next. They have done something extremely cool, in my opinion. Super novel. We're talking about continuous pricing by the second. USTB NAV, of the fund will be priced by the second, which means that any redemptions or purchases, that's exactly the value that they'll be, the transaction will go through, which is, as real time essentially as it gets, right? Which is a fascinating concept of finance. This is one of those things that, as we referenced earlier, fund admins and that kind of game is going to change, because funds now are going to be capable of doing NAV reporting on a by the second basis, which is going to be a powerful value for counterparties that want to use this product in a variety of different ways, especially when it comes to a lot of DeFi and other real-time applications, right? So I think this is, as they said in their post, a new standard, and I actually agree. So good for Superstate and this USTB product for announcing 24/7, 365, 24 hours a day, by the second pricing. So super cool stuff.
This is really cool. This is really, really cool. This is kind of what we've all imagined tokenization could be and could do. Real-time updates on how these funds and assets are performing. It just creates a much more efficient market. It reduces information asymmetry, because everyone can get real-time information as it's happening. 24/7, 365, we're already seeing how that's pushing the boundaries of even traditional stock markets are now expanding their after-hours trading. We're always trending towards that 24/7, 365. So I think a lot of this makes a ton of sense and is aligned with this vision of kind of open and transparent financial vehicles. So major shout out to Superstate. Herwig, I am going to bring up one final article before we get to yours and close out this segment of the show. But the last one that I wanted to bring up was Tether. Tether is the world's largest stablecoin issuer using USDT. They are I think the most profitable business by employee count per capita, because they've got like 50 employees and they make like $10 billion a year or something insane like that. Because again, it's a pretty good business to have just dollars in a bank account, getting interest on it and owing nothing to your constituents, because they're just trading the dollars. But now Tether has been getting very involved in the commodity space. They announced Tether Alloy, which was working on trying to tokenize commodities. And now they're looking to work with Turkey to convince them to tokenize the nation's commodities markets, starting specifically with boron. Boron is a particular element, metal, I'm honestly not totally sure, but it is an element that is used in all kinds of manufacturing for parts and machines and all kinds of developments. And so Tether is working to help with Turkey to figure out how they can tokenize these assets for a more efficient valuation, fundraising, and sale process for these assets. The country of Turkey has about 70% of the total global reserves of boron, which results in about 1.3 billion in sales in just 2024 alone. So this is a pretty big market for just Turkey, and I think it really opens up this opportunity for nations. Now, Turkey is a big, large-scale economy, but there are so many countries and nations around the world that have access to natural resources that have struggled to bring those into the traditional economy and have struggled to get those things financed and capitalized. And so I think that this is a really interesting step in the right direction.
Without a doubt, this will be an innovation and a solution for access to financing and unlocking, and giving those nations sitting on a lot of resources the opportunity to take advantage of that. And maybe in some cases, even preventing, from an eco standard, not even needing to potentially, have to mine or do anything related to any specific type of resources. So it's all possible potentially in the future. I think good on Tether for that. I'm going to end out our debrief, Kyle, with Franklin Templeton, $1 trillion asset manager, mega leader, innovator in the tokenization space with their Benji product. Basically one of the first to big asset managers to really get in this space, and one of the first to bring it to retail masses on public chains, which is what they've been doing over the last, if you've been listening for the last 18 months or so, you've been seeing Benji ramp up the number of different chains that they are compatible in launching their money market fund product essentially on. And Base, in this case, didn't yet have a large asset manager that actually had one of their products on it. So this is a big deal for Base as well. We've seen just kind of like how I think Libre with Brevin Howard and Hamilton Lane, and I think maybe a BlackRock product, they went to Solana, as kind of like a first. We're seeing a lot of these other chains saying, hey, we want to support RWAs. We want to bring in institutions. Since then, we've seen a lot more adoption on that front outside of the, say, usual suspects when it came to, launching on Ethereum or an L2. So Kyle, what do you think about this? This is the 6th chain that they now support for Benji.
That's honestly, it's incredible. Multi-chain assets are the future. They're the present. It's everything. We, back when we used to do the main topics, we did a full main topic on what we were calling MCAs, right? Multi-chain assets, because at the end of the day, these are a real asset. It's a real physical thing. Whichever chain you want it on, whichever ecosystem you need it in, great, let's do it. The tokenization always was commoditized, and Franklin Templeton is proving the opportunity here. I think this is really, really cool, and it's the key to liquidity. It's making sure that you can connect and integrate with everything that's going on. They're doing so much of it in-house, and I think it's really, really impressive. They deserve a lot of praise for that. Base continues to grow. Coinbase's blockchain. I have to say, Coinbase has done a really, really good job, because you'd think like, oh, this sounds like an enterprise corporate style of blockchain, but most of my crypto friends and people in the crypto community, this is anecdotal, obviously, but most of those people don't have a problem with it. Apparently it's built very well with the crypto ethos in mind, and it's built on top of the Optimism stack, so it is Ethereum virtual machine compatible. It sounds like Coinbase really did everything the right way, and they have seen a huge surge in stablecoin adoption, as well as now they're bringing on institutions. This is definitely a blockchain to watch moving forward.
Oh, yeah, we will be on this show every week. But that's it. That's all we've got for you. But don't go anywhere again because, of course, we've got the companies of the week. So let's run it.
Do you smell that in the air, Herwig?
Oh, yeah.
It smells like the most beautiful prairie meadow with the sun shining, blue skies. Are we in heaven? No, we are in the companies of the week segment, the best segment of the week, perhaps the best award of the year for anyone in blockchain technology and anyone in finance. You don't want to miss the company of the year winner coming up here at the end of the year, only if you are nominated on one of our 50 shows of the year. If you have to be nominated for company of the week in order to be nominated for that yearly award. We have some huge stalwarts that have won in the past, and it is also, I think, my favorite segment of the show, Herwig, because it's so easy to get excited for some of the best moves, most noteworthy things going on in the industry. I'm ready to go.
It's also one of the toughest, Kyle. This is not an easy decision we make lightly every week, going through, especially these days when there are so many cool things and big announcements happening. This was a tough one specifically this week, man.
Yeah.
Lots of stuff. Do you want to start or shall I?
Well, Herwig, I mean, I can kick it off. I think that we both had an interesting theme this week, was that both of our companies, they both launched interesting kind of nuances or facets to the traditional style of products that we've seen in the market that have really driven some innovation and I think are really, really fascinating and important for the market. My winner this week is actually Libeara. And Libeara is the company behind this Wellington Fundbridge Capital Treasury tokenization issuance. And as we talked about on the show, Herwig, the reason that they won is because I do think it's really innovative that they're working on this security-to-security settlement solution. Traditionally, and we've talked about this for quite some time back in the day, when you're making an investment or a trade, you have what's called a trading pair. This is where when you want to buy a specific asset, you need to have the base currency with which you're going to trade in and out of all these assets. And traditionally, those base currencies would be in a fiat or something like that. And because of that, if you wanted to trade from one stock to another stock, you would kind of need to go stock, cash, cash, stock, right? And vice versa. And that kind of disjointed move has fees, that has time associated. You also could have a change in price or something like that because you have to make two transactions instead of one, right? And so if you're a high frequency institution, you're a trader, you're a market maker, that can add up. If you're having to do that over and over and over, you can have double, triple, quadruple as many trades than what you actually want. And so what I think is really novel about the blockchain technology is we can do what Herwig, you and I have called and have noted here on the show many times, the atomic swap. This idea that you can just swap two assets without needing that underlying fiat to settle the transaction. You would need to price the assets, obviously, in some sort of fiat, but you would not have to necessarily use that underlying collateral in order to make the transaction. This is one of the first examples of us seeing that with money market fund, regulated securities, all thanks to the power of Libeara and their technology alongside many of their partners. So for that reason, I got really excited about this opportunity. And for those things, they are my company of the week.
I mean, that's history. That's history being made right now. These swapping between securities is going to be a fundamental shift in finance that we've never seen coming. And I'm so excited for it. So good job on Ondo and the counterparty on making that happen as well. But absolutely, I think they deserve it. Congrats, Libeara. Well,
absolutely.
Kyle, now I'm chomping at the bit to get at this. All right.
Tell me.
Tell you, I was blown away by this continuous pricing model by Superstate. So of course, I'm going to give them my company of the week just because this is one of those things that a lot of people wonder, again, like how does this really improve if you put away the liquidity for LP potential, which is kind of always a potential myth. It depends on how much you can create a market around that. But ultimately, being able to have by the second pricing, that's another one of those things we were just talking about, having a 24/7, 365 economy that is in real time for swaps. You want that priced in real time by the second. Doesn't get any better than that. So this is the power of blockchain and tokenization. So Superstate, by leading by example, I think you're setting a trend. I think a lot of other folks are going to follow in your footsteps in this model. So good job, Robert and Jim over there and the rest of the team. I love to see this innovation. We'll see how much interest this grows for USTB and what kind of integrations that come about from this, what kind of partnerships, because I'm sure it will lead to very many interesting ones, Kyle.
That's right. I think this makes total sense. This is a really exciting development and two great companies this week, Herwig, I'd say.
I would, but that is the show. So you're going to have to wait till next week again to get us back with more and more great tokenization news. If you want our amazing newsletters, just go to stm.co and sign up. We've got our What's Drippin', as well as a lot of other great content, as well as more on YouTube. And stm.co itself with all the latest trading information. And hopefully everyone also had a happy Halloween yesterday if they were here in the United States or wherever they might have been celebrating. Kyle, any closing thoughts on your end?
Hey, Herwig, as always, thank you to the STM team, all the hard work that goes on behind the scenes. We've got our wonderful Jason there in the back, putting the whole show together, helping us out with research and being just an unbelievable part of the team. And Herwig, it's just such a pleasure to share the stage with you. So congratulations on everything STM's been doing. And I love being here. It's good to be back.
Well, for those of you who listened this long, thank you again for always enjoying our content, and keep supporting us however you can if you haven't subscribed or liked, and look out for a big, massive announcement on November 19th in New York City at the Benzinga Future of Digital Asset Conference. That's all I'm going to say, Kyle, other than, of course, happy tokenizing, everyone.